a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Homebuilder ETFs. And home builders have been very hot of late because the housing market is so strong. So let's take a look at some of the housing data. The National Association of Home Builders recently reported that its housing index is at its highest level on record, with data dating back to 1985. And in fact, all three of index's components, which are home builders' assessment of current sales, their expected sales, and foot traffic, all three were very strong, very strong. And then housing starts for the month of July were up 22.6%, which was much better than expected. New home sales were up 36.3% annually. This was reported just today, this morning. And sales of existing homes were up 24.7%. So all very strong numbers. Now let's take a look at why housing is so strong amid this pandemic. So on this slide, I have some of the reasons. So the main reason is record low mortgage rates, because the Fed has reduced interest rates to near zero, and those low interest rates are expected to continue for some time. The mortgage rates have ticked up just a little bit in the past couple of weeks, but they are still at record low levels. Then we have seen a lot of migration from urban centers like New York City, San Francisco to suburbs, because many companies they have extended their work from home policies. Some companies have even said that their workers can work from home forever. For example, Twitter Square. Google has extended work from home till July next year. So their workers are migrating to suburbs where they have more space, a backyard probably for their little kids. And these people who are migrating, they are, mainly better paid workers, many of them in the technology industry, so they can buy homes, they can pay for more expensive homes too. So that is also boosting housing market. And as a result, the US home ownership rate, which is led mainly by younger millennial buyers, that has jumped to highest rate since 2008. Now, one thing which could impact this rally is surging lumber prices. Lumber prices have more than doubled since mid-April. So that is something we need to watch. Otherwise, it seems that housing may remain very strong in the coming months as well. Now let's take a look at two housing ETFs. There are two in this space, two main ETFs in this space. So the first one we are looking at is the most popular in this space. It's the iShares US Home Construction ETF, ticker symbol ITP. It mainly holds US home construction and some related stocks too. It's a market cap weighted ETF, very popular with over 2 billion in assets. It charges 42 basis points. Now, to learn more about this ETF, please go to the quote page on Zacks.com. You can read our articles, research report, and you can go to the external homepage, which is iShares web page for the ETF, using the link. And from there, you can look at the sector exposure, holdings, etc. So you will see that DR Horton, Lennar, NVR, Pulte Group, the top home builders, they occupy a lot of weight in the portfolio. So this ETF is top heavy. When these home builders will do well, this will do pretty well. But looking at the exposure, in addition to home building, it also holds building products and home improvement retail companies too, like Home Depot, etc. Some specialty chemicals, home furnishing. So about two-thirds of the portfolio in home building stocks and rest in related stocks, companies that are related to home building industry. The second one in the space, also very popular, is by Spider. It is Spider S&P Home Builders ETF, ticker symbol XHB. It also holds companies in the home building segment. This is an equal weighted ETF. This is cheaper than ITB with an expense ratio of 35 basis points, and also very popular with over 1 billion in assets, but not as popular as ITB. Now, let's take a look at this ETF by again going to the quote page on Zacks.com and then going to the external homepage, the State Street web page for this ETF, to learn more about this ETF. And you will see that it holds companies in the following sub-industries: building products, home furnishings, home improvement retail, home furnishing retail, and household appliances. So this provides more diversified exposure. So if you think that home builders will continue to do well, ITB is a better bet for you. If you think that companies in the related industries will do well going forward, then probably this is the ETF for you. And we have seen from the recent earnings season that many home improvement companies reported excellent results, like Home Depot, etc. Because people who are staying at home, working from home, they're spending a lot of money on improving their homes. So that is a trend which may continue going forward too. Whirlpool, D.R. Horton, Carrier Global Holdings, Pulte, Fortune Brands, these are the top holdings in this ETF. Now you will see that building products, in fact, occupies highest weight in the portfolio, then home building companies, and then home improvement retail and home furnishing companies. So very different kind of exposure, though both have home building in their names. Now, on this slide, I have the comparative performance versus the S&P 500 index. You will see that ITB has done really well. It's up about 27% year to date. XHB has also done pretty well, up 20% year to date, whereas the S&P 500 index is up just about 5% this year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I'll see you next week.